Welcome to Breaking News to Trading Moves. Today we're looking at a really significant strategic decision, one that touches on EVs, energy, even the tech sector in some ways.
That's right. We're talking about Berkshire Hathaway finally completing its exit from BYD, the big Chinese electric vehicle maker. A stake they held for, what, over a decade?
Yeah, a long time. So for our discussion today, we're going to look at how the market's reacting. We've analyzed the commentary, and we're going to lay out the companies being tagged as sort of market winners and losers following this move.
Exactly. This wasn't just trimming a position, it was a full exit. And that sends a message.
A message about what, specifically? What's the underlying theme here?
Well, the interpretation seems to be a potential move, maybe a rotation, by big investors away from, let's say, China-specific risks and maybe some EV sector complexities.
And towards what?
Towards assets perceived as more stable, high-conviction U.S. holdings. It's seen as a kind of strategic clarification.
Okay, let's dive into that. Starting with the winners, the companies potentially benefiting here. And number one, maybe obviously, is Berkshire Hathaway itself, ticker BRK.B.
Right.
But why is selling a profitable long-term investment like BYD seen as a win for Berkshire's own strategy?
Good question. It seems to hit two key internal targets. First, it gets them out from under the direct exposure to China. You know, the geopolitical situation, regulations, all that uncertainty.
Okay, risk reduction. Makes sense. What's the second goal?
The second is freeing up cash, a substantial amount. And this seems particularly important for the current leadership, what people are calling the Abel era.
Can you elaborate on that Abel era idea? What does that signify for Berkshire?
It refers to the strategic direction as the firm looks toward the future under Greg Abel. The thinking is maybe less focus on finding those massive hidden value gems of the past, and more on deploying capital efficiently into known high-quality U.S. businesses.
Businesses with predictable cash flow.
Exactly. Predictable domestic cash flows. So selling BYD, it streamlines things, reduces complexity, frees up capital. It fits that playbook perfectly, improves capital efficiency.
Got it. So let's follow that cash. Winner number two identified is Occidental Petroleum, OXY. Berkshire's already got a big stake plus warrants.
Yeah.
How does the BYD cash help OXY?
Well, it's partly perception, partly mechanics. Berkshire is clearly committed to OXY already.
Right.
So when a giant like Berkshire suddenly has billions more in dry powder and they already like OXY, the market starts thinking, maybe they'll buy more.
The anticipation of more buying.
Precisely. That perception of strong, deep-pocketed support, it can boost the valuation. And there's mention this could potentially lower the equity risk premium for OXY.
Okay, unpack that a bit. Lower equity risk premium. What does that mean for shareholders?
So the equity risk premium is basically the extra return investors demand to hold a stock compared to something super safe like a government bond because the stock is riskier. If the market believes Berkshire might step in and buy more OXY, perhaps putting a sort of floor under the price, the stock seems less volatile, less risky.
I see. Lower perceived risk.
Means investors might use a lower discount rate when valuing OXY's future earnings, and a lower discount rate generally translates to a higher current stock price. It's a confidence thing, backed by potential billions.
That's clear. Okay, let's switch back to the EV space itself. Berkshire exited BYD, signaling caution maybe, yet Tesla, TSLA, is listed as a winner. Why?
Yeah, it seems counterintuitive at first, but the thinking isn't necessarily anti-EV overall. It seems more targeted at, well, China EV exposure.
So it's geographic.
Largely, yes.
Yeah.
When a major, respected long-term holder like Berkshire completely sells out of a key Chinese name like BYD, other global institutions take notice. They review their own holdings.
And what do?
They might decide to consolidate their EV bets, move capital towards what they see as higher quality, maybe names showing relative strength, or simply companies based in, less complex geopolitical environments.
Meaning the U.S., in this case, favoring Tesla.
That appears to be the read. The idea is that capital rotating out of China EV exposure could flow towards TSLA, helping its sentiment and potentially its valuation multiple, especially compared to its Chinese peers facing those headwinds.
Interesting. Okay, moving away from energy and autos for a moment. The analysis also highlights a couple of names that feel more like traditional safety plays. Winner number 4 is VeriSign, VRSN.
Oh, yeah.
This fits that durable cash compounder idea you mentioned earlier. What makes VRSN stand out?
VeriSign is Essentially infrastructure for the internet. They manage the registries for key domains like .com and .net. Think of it like a toll booth.
A toll booth on the internet highway.
Pretty much. If you have a .com website, VeriSign gets a piece. It's essential. It's incredibly sticky revenue, high margins, and it's pretty insulated from economic ups and downs.
So when Berkshire has cash and wants safety and predictability,
Businesses like VRSN look very attractive. It's almost like an annuity, that cash flow. Very reliable compounding potential.
makes sense. And the final winner mentioned is SiriusXM, ticker CUII, another name Berkshire knows well.
Yes, CRI fits neatly into what seems to be Berkshire's redeployment pattern. They often like U.S.-based companies generating lots of cash, businesses they understand well.
Subscription models are usually pretty predictable, too.
Exactly. Sirius has that subscription revenue, it's domestic, decent margins. The market anticipates that some of that BYD cash might find its way into CRI, maybe through incremental buying, and that expectation alone can support the stock's sentiment.
Okay, that covers the potential beneficiaries. Let's flip to the other side now, the losers. The overall theme here seems to be growing caution across the China EV sector specifically.
That's right. Losing an anchor investor like Berkshire, combined with the really intense price competition already happening in China, it creates a tough backdrop.
So starting with the obvious one, BYD itself, ticker BYDDDY. Beyond just the shares being sold, what's the core damage here?
I'd say the main damage is to the story, the investment narrative. Berkshire holding it for so long was a huge vote of confidence, almost a seal of approval that likely helped BYD attract other international money.
And now that seal is gone.
Exactly. It raises questions for other global funds about the long-term risks, geopolitical, competitive, pressure-squeezing margins, you name it. It could definitely trigger more de-risking from other offshore investors.
And this negative sentiment doesn't just hit BYD. The analysis mentions NIO, ticker NIO, feeling read-through caution. What does that mean?
Read-through caution just means the market doesn't look at companies in isolation. If a major player like Berkshire is reducing risk in Chinese EVs by selling BYD, investors worry they might sell other Chinese EV holdings too.
So guilt by association almost.
Sort of. It creates a general skepticism that can push down the valuation multiples for the whole group. It makes it harder for companies like NIO to command premium valuations based purely on future growth promises.
Okay, and similar logic seems to apply to XPeng, ticker SXPEV. The notes mention they already face challenges, like relying heavily on promotions.
Right. SXPEV is already dealing with some negative sector sentiment, and they've been using promotions quite a bit to sell cars, which obviously puts pressure on their profit margins.
And this rotation away from the sector makes that worse.
Certainly doesn't help. When investors are actively looking to reduce risk, companies that seem to need heavy promotions to grow become less attractive. It puts more pressure on SXPEV's valuation and makes achieving better margins even harder.
Even Li Auto, while dollars, which has been noted for its relative strength, particularly this hybrid strategy, gets caught up in this.
Yes, even Li Auto. While their hybrid approach has given them some differentiation, they're still fundamentally part of that China EV category.
Yeah.
If big international investors decide to broadly reduce exposure to the sector,
Even the stronger players feel the chill.
that's the idea. The overall flow of offshore investment into the sector might cool down, which could limit the premium valuation Lars has often received for its growth. When the category itself is viewed more cautiously, everyone inside it faces more scrutiny.
Okay, and finally, there's a knock-on effect mentioned, reaching into the materials space with Albemarle, ALB.
Yeah.
How does Berkshire selling an EV maker impact a lithium producer?
It's a supply chain connection. Lithium is obviously a critical component for EV batteries. China is a massive market for EVs and thus a huge consumer of lithium.
Right.
So if this move by Berkshire and the potential follow-on de-risking leads the market to temper its expectations even slightly for global EV growth, especially driven by China.
And then the expected demand for lithium might soften a bit.
Exactly. Even if it's just at the margins, any perceived slowdown or increased uncertainty in the biggest EV market can soften the outlook for lithium demand and pricing power. That affects the assumptions underlying the valuation for producers like ALB.
Okay, so summing this all up, we're seeing pressure building on the China EV names BIDLAAR, SXPAA, $9 driven by this exit and existing market conditions. And on the flip side, a perceived strengthening or increased focus on certain U.S. names seen as durable or strategically favored by Berkshire, like BRK.B itself, OCXY, TSLA, VRSN, and Sarai.
It's a pretty clear illustration of capital moving in response to perceived risk, regional risk in this case, and strategic goals like capital efficiency.
Yeah.
What's really interesting to watch now is whether and how quickly that freed up capital actually flows into those perceived winners. That will confirm if the market's initial take on Berkshire's strategy was correct.
Fascinating stuff. Before we wrap up, a quick reminder for everyone listening. Please note that this discussion reflects the opinions of the author of the material we reviewed today. It is not financial advice, nor is it a recommendation to buy or sell any securities. The tickers mentioned were BRK.B, WASH 3SAA, CRI, BTDY, 9ALS, 6PE, DNOLers, and IOBAL.
Always do your own research.
Absolutely. Thanks for joining us on Breaking News to Trading Moves. We'll catch you next time.